Hi everyone, this is Michael Bengiat with Lifetime Investor, and this is the Stock Picks Weekend Review video for December 10, 2022. Let's go ahead and get started. There's a disclaimer, you can check it out. And as usual, we're going to go into the current market environment. We'll take a look at the one stock on our portfolio and review the stocks on our watch and ready list. Okay, so we still have our stock environment indicator. It is solidly on red. We're just, this is a broken record. It's like week after week. We're just not getting any traction on breakouts. We're getting much more stocks failing than not. It's just, we're getting the pop and drop scenario that's been going on for this whole year just is back. It's actually, we had a little bit of, about a couple of weeks ago to a week ago, it looked like the market was improving. We saw some breakouts holding. They weren't really going anywhere, but they were holding, and now they're starting to fail again. We're seeing less stocks even setting up in our trend template. So that's where we are. I mean, we just have to continue to be patient. We're always looking for the best stocks, which is what we do when we're screening. And you know, some of those are going to turn out to be some of the big winners in the next bull market. And all I can say is that, you know, as frustrating this period can be, our goal is to, we're not really trying to make a lot of money. We're just trying to, we continue to trade a little bit here and there. We just put on a position, and more just for keeping our finger on the pulse of what's going on in the market. You know, we're just for slightly underwater for the year, nothing that we can't very quickly recover from. I think we're down about 7%. One short good period, we'll get all that back and more. So the whole key in this period is you just not to lose your confidence, not to lose your capital, is to just take it easy. We use what we call progressive exposure, where we're just, if it's not working, we back off. You can see this, we put on just one position at a time. We don't put on another position unless the first one's working. Unfortunately, most of them turn around and exit. We've been taking profits along the way if we get them. It's been, and those have been really short term. If you haven't taken your profits after 2-3 days, usually that's all you get. We haven't seen really very few stocks have actually gone on to make a decent move. We're talking like 30-40%. I mean, this is the environment. So it's, as I mentioned before, we're still over here on our thing, swing trading, the shorter the better if you want to make any money. And I recommend stock exposure just very little. So let's go ahead and take a look at the stocks on our list. There's not a lot left here, but we will go ahead and start. So the first one, sorry, give me 1 second. I need to switch back over to my list on my other screen here. So just give me 1 second. Okay, so the first one is Model N. We just put this on our list. It's actually one of the few tech stocks that's actually doing pretty well. And you can see here, let's go to a weekly. So you can see this stock in 2020 had a nice run up here. This was the coronavirus crash, quickly came back up, but then sort of ran into trouble, tried to break out of here, this cup with handle, and then just started to chop around, and then finally went into what we call a stage 4 decline. Just the moving averages are heading down, everything's heading down, the market was heading down. So this was just, yeah, this is a part we want to avoid. But then we made a turn here, and we popped up on some really strong earnings, and this is a weekly chart. And then we formed a little cup, and then we broke out of the cup, and now we have some tight areas here, which is we're always looking for tight areas. Go to the daily, and one of the things why we actually entered the trade, this was too volatile, and this was actually a little bit faulty. And so you can see here, see how sharp this was? Just came down and came ripping right back up, broke out, had this big reversal. You can see right there. And then actually came down all the way. This was the buy zone of 5%, and this is the sell zone from 5 to 8%. This would have ended up stopping you out if you bought this, because it came down right to the bottom at 8%. So a little too sharp There was no handle in this cup, so this was a little bit of a faulty base. But it came ripping right back. And what we like here is it came another real strong day and then started to tighten up. And this is where we actually bought it, breaking out of this. Of course, it reversed because this is how the market is. So we haven't really had any profit yet. But as a tech stock, they provide revenue management software for life science and technology industries. Got great numbers here. Composite is 97 out of 99. Growth rate 103%. It's got pretty good earnings. A little bit of deceleration, not super strong there. Margins are pretty good. But for a tech stock, something's going on here that you're not seeing in basically most other tech stocks. So we will just, so we bought a quarter position just to have a little, if it gets stopped out, it's really not going to be anything in terms of dollars wise, it's not going to really hurt us. But we wanted to at least take a little position in this because it is forming this nice little tightening pattern. It's almost like a little bit of a flag, and the flags tend to come out the top. I wouldn't trade on that news, but it does look good. I wouldn't be surprised if this can head up. And this sell-off too has all been kind of on low volume too. You can see that as the stocks come up to old highs, really not a lot of selling. If we go back, now some people say, well, there's a lot of overhead resistance. So when you come over here, yes. Now the stock, if you look at this, really the stock hasn't traded very much above this spot. And we're going back though a year and a half. And at a year and a half, these sellers have usually already been, these people who bought up here have already been, taken out. So since this overhead resistance is so far back, we don't really consider it. So we're going to kind of think of it, the stock is sort of free to go up here without having a lot of old sellers that are looking to get out. So it looks pretty good. This could be a real big winner coming forward since it's one of the few tech stocks that's actually doing anything. Okay, so let's go to the sole stock on our ready list, and that is Turquoise Hill Resources. This is a Canadian company, gold miner and copper miner. Now this one is really one of the few, there's most of the stocks in this sector really have just not doing well at all and really making new lows. This one's actually coming up and really just showing a lot of strength. And we're starting to just tighten up here, which was really, really nice. And the volumes come way down. And then we've had a few days here where the volumes come up with it. So it's looking pretty good. We're trying to buy just right over here. So we're right in the beginning of the buy zone. As you can see here, there's really not a lot of sellers left. The sellers were all kind of lurking around 30 to 30 and let's call it 30 and a half to 31. And then we see it really here. We're just at the top of that. Not a lot of, there's just not a lot of sellers that have been floating up here. So just a few over here. So it looks pretty good. Again, something must be going on with this company too, to be one of the few mining companies that's actually making new highs. And you can see the RS 97, very strong. On our long-term outperformer ready list, we don't have any stocks, fell off. And let's go now to the watch list. So we just have a few. The first one is Model N. So we already talked about that. This next one is Quanta Services. Ticker is Power, PWR. Now this is one I bought from my personal portfolio and got stopped out. So I didn't put it on the, it tried to break out and I had a very tight stop right below this here, and it took me out at the close on Friday. So this is looking pretty good. Again, it's good fundamentals. 97 earnings per share, 97 overall, growth rate 25. It's got pretty good earnings, though a little bit of deceleration. They're a specialty contracting company. They do work with utilities, pipelines, things like that. Earnings have been growing, and they're starting to really jump up now in 2022 and into 2023. Let's take a look at the weekly. So this has been a real nice winner since the coronavirus crash. and just kind of grinding its way higher. We are at, looks like, all-time highs here. And so it looks pretty good. We have a cup. You can see here we're just kind of making a base upon a base. That's why you see base 1A, then 1B, 1C. So sometimes you see this when the market overall is just heading down, as you can see here. This is the S&P, this black line. And you can see it's almost as if the overall market is holding the stock down. It's managing to make a little bit higher, it goes a little higher, corrects, but it's just grinding its way up. And I'm feeling if this, the pressure of the overall market gets lifted, this will actually take off. It's a $21 billion company, so it's a large cap. The numbers are pretty good. So it's just one of these stocks that we just have to go, keep our eye on. It's been a little choppy here, but we like the fact that it started to kind of tighten up here and then it broke out. But it looks like we're still a little early, so we'll see what this stock does. Ours is 92, which is good, but not great. We'd like to see this at least 95 or above. So we've got it on our watch list. The last one on the watch list is HEICO. Ticker's HEI, and they're in the aerospace defense. They make jet engine, aircraft component parts and electronics. This one was starting to get a little bit of, see how we had this cup here. First of all, it's been a pretty choppy trader. So this is really, this kind of action here, this will just end up getting you chopped up. But we like the fact that it was starting to move a little bit higher here, and it started to tighten up. See how you can see here where we had this handle, where we had this move down here, then we had a move here, which was even smaller, and then we had this little move here that got even smaller. But unfortunately, it broke down and came ripping back, and then we were breaking down again. So we're continuing to watch this stock. It's just not quite ready, but it is showing a lot of pretty good strength. And again, it's just kind of not made a really big move, but if you kind of go back, let me see if I can do this without. Yeah, you can actually see here, the stock is capable of making a real nice move. So, which is what we like to see, that it has a history of that it can make, even here in a short time, really can make a nice move. But we're just not seeing that here. Again, it could be that the overall market's just kind of squashing it down and holding it down. But we're just kind of managing to grind up to, right here. Yeah, we're at all-time highs. So that's when we're watching. In our long-term outperformer portfolio, we have two we've been watching for a while, just to kind of. So let's start with the monthly on this one. So this is what we like to see on these stocks we've shows, is that we just a nice move up. This one's been a little volatile, but of course we had the coronavirus crash here. But since then we've had really some nice moves ups, holding above these key monthly moving averages. Let's go to a weekly. Yeah, a little volatile. Here we came down, came ripping right back. Let's go back to the daily. So we're watching it because it's it's an outsourcing company, commercial services. They do business process outsourcing and risk advisory services. We were trying to get this right into buying into this buy area. It's just having a struggle. It gets into there and it sells off. So we're just kind of watching it. It's just really too volatile. We want to see it tighten up here. Here's a great example. You can see here we had a little cup, tried to break out, failed, and then we kind of tightened up here. Even though it wasn't at a new high, you can see that it just kind of tightened right here, but it was going to earnings, and then of course earnings, it took off. But it's been very volatile. So it's not ideal for a long-term outperformer, but we're still watching it. But it's not ready to be purchased. And the last one is Exponent, technical consulting service company, kind of in the same, actually, hold on one second. I think they're in the same, yeah, commercial services outsourcing. Yeah, so this is commercial services consulting, but kind of in the same area. Now this one is a little more constructive. You can see here, we had a big cup with handle here. Let me see if I can move this out of the way. Okay, so this was a cup with handle, but this was a faulty one. So number one, We had a huge decline here. This is beginning of 2022. Came straight back up, but then formed this really low handle. We're in the middle of the. We want to see a handle form up at the top. So this was a faulty base. Should not have been purchased. A few people bought it here. Some people bought it here and immediately failed. So that you got a couple days up, and that was the end of that. Came down, formed another faulty cup. Again, little. You can just even see by the shape of the cup. Didn't come up enough. Kind of just a little bit misshapen cup, more heavy on the left side. Again, fake out, broke out from this faulty, formed another one. Now this one's more constructive because we've come back up at least to the same area, and we're forming a little bit tighter handle. Tried to break out though, but we didn't get the big sell-off yet. We've got support at the 21-day moving average here. So it's getting more constructive. We'd love to see this really just tighten up, volume really drop down, and then try to break out from here. So let me put this back over here so we can see the name. So yeah, this one's looking probably the best, but the only thing we don't like about this too is RS is 85. So it's not really one of the true leaders, but for a long-term outperformer, it's actually doing pretty good. And let's just finally look at the, yeah, now this is this is really more of a classic buy chart for a long-term outperformer. Just really nice, just solid uptrend. Of course, we've seen a lot more volatility, but not too bad. We're not seeing these big things. We've come down to the bottom. This is the 40-month moving average. We've bounced off of it. If we end up buying over here, we're actually going to be now bouncing off of the 21-month moving average, which has been a great place. You can see a lot of support has been there overall. So we're looking to buy this, but I think at the same time, the market it's being held down by the overall market, but it has been a very nice winner over time. So that's it. That's all the stocks we have on our list. Really pretty slim pickings. But we shall be back next week, and we'll see what we get and see if our sole position in Model N will hold or kick us out. Okay, talk to you next week.